In this video, I'm going to discuss how to deduct electronics and other equipments that you might purchase to use in your business. And specifically, I'm going to answer 3 or 4 questions. Those questions are, can you get a tax deduction when you purchase electronics for your business? Number 2 is there a limit on how much you can write off? So sometimes you can expense your equipment. Sometimes you have to do what's called capitalize the equipment and depreciate it over a period of time. And I'm going to explain that further in the video. What about if you don't use the electronics 100% for business? What if you use it maybe 30% personally and 70% for business? What about, and this is a common one that I don't hear anyone really talking about, is what about if you purchased this laptop or camera a year ago when you weren't in business, but now you're in business? Can you get a tax deduction for those items? So in this video, if you want the answers to those questions, I'm going to discuss it here in a moment. So if this is your first time watching, my name is Navi Miraj, and I'm a CPA that helps small business owners save thousands of dollars in taxes. And I do that by producing content on YouTube and other social media platforms and teaching you how to apply various strategies in your business. So if that sounds like some of the content you want to be taking in, then I would recommend subscribing, because that's what my channel is largely about. So let's talk about why I'm even discussing this topic of electronics and what have you. So I recently took on a client that is a YouTuber, and he purchased a ton of equipment to use in the business now that his YouTube channel has grown to probably like over 75,000 subscribers. And so when he asked me, I was thinking, yeah, of course you can deduct this. But he told me that the camera, the body alone on the camera that he purchased was $3,400. And I was like, yikes, that's a lot of money, right? And so, he asked if he could deduct it. And I said, okay, let me kind of explain how this works. And I myself recently upgraded my audio and video experience here in my little YouTube studio. And I myself spent over $1,000. So I thought it would be a good idea to discuss this with you, because you're probably thinking about doing the same. So believe it or not, actually, I shot a video about all the equipment that I purchased. So if you're going to try to level up your video and audio game on YouTube, or maybe you need to purchase a new laptop or what have you, I'll leave a link in the description below, as well as in the cards up above if you're watching on YouTube. And because I put in a lot of research on what equipment I purchased, I wanted to be, cost friendly. I didn't want to spend $3,400 like my client, yet I wanted to still produce really good results. So I'll link that video, and you can take a look at that if you're curious and want to duplicate or mimic the stuff that I purchased. Anyway, let's get into the questions. So the first one was, can you get a tax deduction when you purchase electronics or property in your business? So yes, of course. But there are some rules that you need to follow. So let's kind of talk about those rules a little bit more. So the first sort of one I want to talk about is there a limit on what you can expense versus what you have to capitalize and depreciate? So some of you are like, what? What are these terms? I don't really understand what they mean. So let me kind of explain this for you. There is a rule, it's relatively new, that says if you purchase equipment, so that could be a desk, monitors, camera, cell phone, laptop, what have you, and that equipment on its own costs less than $2,500, then you can write the whole thing off as an expense in the year that you purchase it. So as of the date of this recording, it's 2021. If you buy something that's $2,500 or less, you can expense that on your business tax return without really question, if you will. And that's a pretty strong tax deduction, if you ask me. It used to be many years ago that it was capped at $500. So the IRS increased that to $2,500. So that's a pretty big deal. But what happens if it costs more than $2,500? Well, in that instance, you have to do what's called capitalize that asset. So what that really means is, if you have financial statements, you need to actually put that on the books of your financial statements. So that would actually go on your balance sheet of your financial statements. So let's say it costs $3,000. You would have this camera for $3,000 on your books. And instead of deducting that all in the year that you bought it, you would have to depreciate it over a period. And typically for electronics, even though I know technology is evolving so quickly, the IRS counts that as sort of a 5-year depreciable like time horizon. So it would take you 5 years to expense that. Now, before I scare you, a couple of things I want to mention there. I know that a lot of small business owners don't actually have like bookkeeping software and don't have books. So instead of that going on your balance sheet, make sure you tell your tax preparer that you purchased this large dollar piece of equipment, and they'll put it on the tax return where it belongs and depreciate that over a period of time. Now, that said, there is something called a Section 179, and I won't bore you with the details there, but the cool thing about it is if you purchase some equipment in your business in the next few years here, chances are you can use the Section 179 and be able to, yes, you have to capitalize that large expense, but instead of waiting many years to depreciate that item, you can depreciate it probably within the first year. So chances are if you're watching this video, the type of equipment that you'd be buying, it's not going to be tens of thousands of dollars. It's probably less than that. And so you could sort of use it as an expense, but it will just be done differently. It will be done by capitalizing it, depreciating it, but leveraging Section 179 so that you can get the business write-off all in 1 year. All right, so, what about if you don't use it 100% for business, right? That happens all the time. So let's use an example. So let's say you purchase a laptop for $1,000. It's your only laptop, and therefore, you might think it's reasonable to say that you use it 70% of the time for business, right? So that means obviously you use it 30% of the time for personal stuff. Well, that means that you can take $700, right? The $1,000, the cost of the laptop times 70% is $700. So you can deduct $700 on your tax return, but the other $300, that's personal use, so you wouldn't get a tax deduction for that. So that's kind of how the business use percentage comes into play. Now, similarly, if you have, well, let's talk about cell phones, because cell phones are like a little bit of a unique topic here. So if you have a cell phone, and again, it's your only phone, and you use it for business, you're really not going to be able to get away with saying that you use that 100% for business, right? If you don't have another line. So again, you would want to probably deduct, let's say 70% for business and 30% for personal. Now, what you can do though is if you have a regular like landline in your home, right? If you have that landline in your home, what you can do is you can actually deduct 100% of that cell phone as a business expense. Just be reasonable with it, right? You really actually need to be using that phone for quite a bit in your business. But basically what I'm saying is the IRS has kind of loosened up the rules and said, all right, fine. If you have a landline or another phone that you don't use for business, it's separate than your cell phone that you use for business, then you can write off not just the cost of the cell phone 100%, but also the monthly service that goes along with it, right? Now, what about if you purchased equipment like, let's say, a year ago, and now you've decided to become a realtor or a YouTuber, and so you're using your laptop or your camera in your business? How do you handle those expenses, right? Or those assets that you purchase? So you can still get a business deduction for this, believe it or not, but it works a little bit differently than the stuff I explained earlier. So what you have to do is basically determine the fair market value of the item that you purchased in today's dollars, right? As of the day that you started using it for business, and then you have to depreciate it over a period of time. You can't just expense that item in the first year you start using it for business. So I actually made a little bit of a spreadsheet for you, so I'm going to share my screen with you and kind of walk you through this. So don't get too, overwhelmed by the numbers here. Let's just kind of walk through this together. This is just a list of personal property items that you're going to use to be converted into business. So let's say you had a laptop that you purchased, a desk, a chair, and a camera. And so when you first purchase these items, this is your cost. This is what you purchased them for about a year ago. So you can see we have a laptop for $1,200, a desk for $200, and so forth and so on. Now, what you have to do is when you start using this for business is determine the fair market value. And that's what's in this column here, right? So How you do that is you can basically go on eBay or on the internet and kind of search for your laptop make and model and take a screenshot of that or print that and save it to a PDF, kind of store that away in your files if you ever get audited, and use those as, probably it would be wise to see auctions if you're using eBay that have actually closed and not what people are just asking for the item, but closed prices to get you an idea of what the fair market value of that item is. So in this example, let's run through the laptop from A to Z. You bought it for $1,200. You know how technology is. 1 year later, that laptop's only worth $800. And so what you have to do is you have to take the lower of your adjusted basis, which is your original cost, or the fair market value, right? So obviously the lower of $1,200 and $800 is $800. Then you have to say, okay, well, this depreciation period for equipment, or I should say specifically for computers and stuff, is 5 years. So I have to take the $800 divided by 5 years, and that's what you can see over here. You see year 1 depreciation is 160, year 2, year 3, year 4, year 5, and so on. Obviously in year 6 and year 7, you fully depreciated this. If you add these together, you'll see that the total is $800, which is the total fair market value. Similarly with a desk and chair, the same thing applies, but the IRS says that desk and chairs and stuff like that are depreciated over 7 years. So you have to spread that over a 7-year period. Now, as you can see, just because this stuff at fair market value when you started using it for business is $1,625, you don't have a year 1 expense of $1,625. You've got year 1 at $312, year 2, year 3, year 4 at $312, and then in years 6 and 7, just the desk and chair are in there, right? So hopefully that sort of clears things up or explains to you just how you can use personal property and what happens when you start your business, how that personal property sort of gets converted into business property. So another reason that I myself purchase equipment that I want to bring to your attention is I actually wanted to sort of level up my audio and video game on the content that I'm producing for you, but also because I am in the process of compiling a course. And this course is going to take you from knowing nothing about taxes all the way to implementing strategies like the S corporation that can save you about $10,000, hiring your children, then taking it a step further, hiring those minor children and starting a Roth IRA for them at, let's say, the age of 7 so that they can get started at their retirement at a young age, or even retirement funding for yourself. I'll teach you how to get $50,000 or more in a retirement account in a single year as a small business owner. So these are all very powerful strategies that I'll be teaching in this course. So you don't need to be a CPA to understand this stuff. You just need, someone like myself who can break this stuff down into easy and digestible things that you can understand. And I guarantee you'll be able to do it on your own. So what I've done is I'm still in the process of creating that course. Like I said, I've created a wait list. So you can go to navimiragecpa.com/learn. And if you enter your name and email address there, I'll put you on the wait list. And so the advantage of doing that would be I'm going to send anyone who signed up for that wait list a coupon code right before the course launches. And that coupon code, I'm not sure exactly how much it's going to be worth, but I could almost guarantee it'll be at least $100 off the cost of the course when I do release it. That said, I mentioned it a few times here, but I'm going to link another video that talks about the equipment that I used when I decided to level everything up in my YouTube studio. So you can check out that video here in a second. And if you haven't subscribed yet to the channel, please do. As I said, I'm only teaching you and educating you about small business and how to save the most amount in taxes. So with that said, I'll see you in the next video.